Welcome to the daily update. We'll go over the action in the market for Wednesday, April 23rd, and we'll see how things look for Thursday, April 24th. Now, we had a really nice open. The futures were strong. We gapped really higher, and we went up, we hit resistance, and we kind of spent the afternoon selling. So it wasn't all that positive of a day. We gave back a lot of the gains. We're seeing some improvements with our charts, but we're still looking negative overall. So, right at the open, we had a huge gap higher open above R2 at 53.70, and then we were able to advance, but we hit resistance at R3 at 54.72. Then we declined. We came back down to R2, but we were able to stay above R2. And then we closed just a little bit above R2, but well off of the highs. So we were up 1.67%, and we're still below average with volume. It picked up, but there's a moving average that we use, and we're still below that overall. So we're still negative in the short, intermediate, and long term. Now we're working off some of these oversold conditions. We actually have a few overbought conditions right now, and I'll go through the charts and show that. Interest rates ended up being unchanged on the day, so that really wasn't a factor. We're seeing a little bit of a bounce with the dollar, but a lot of this is just rhetoric that's coming out saying, okay, maybe we'll be able to reach a deal. Maybe things are going to calm down. Maybe we're not going to play hardball as much as we thought as before. Well, there's really nothing substantial that has happened, but there's some talk that's been coming out, and that seemed to calm the markets down, at least over the last couple of days. But we're not really seeing any strength coming back into the market. If anything, we're seeing some selling into strength right now. Okay, so the president did indicate that he has no intention of firing Fed Chair Powell. Now, whether you like Powell or don't like Powell, you want him to go, you want him to stay, that's kind of beyond the issue. It's that there's problems between the executive branch and the chairperson of the Fed, and the markets don't like that when there's this bickering going back and forth. And he also said he won't play hardball in trade talks with China. Who knows? That could change too. I mean, we're not really seeing anything substantial yet, just talk. And then he added that tariff rates will come down substantially if the two sides reach a deal, which this kind of goes back to the art of the deal, that he's saying these kind of outlandish things with the hope of bringing the two sides together and saying, okay, let's work something out here. And as they go back and forth and actually do some negotiating, then they work something out that's not as radical as what was originally stated. We are under 30 with the VIX, but we're still above 20. That's the problem. We get quite volatile when we're above 20, but we are coming down. We're at 28.45, and then we're improving with some of our oscillators. And you notice here, the slope oscillator, the MACD, which is another oscillator, those are the ones that are still extreme negative because they were really going down, but they're actually positive because they've crossed above their moving averages and starting to turn and come up, but they're still giving an extreme negative reading. And then we're actually overbought now with a few of our short-term indicators. That's showing the last couple of days. Tuesday and Wednesday, we had powerful up moves. We really haven't come out of this range we've been in. We're just kind of at the higher end of it right now. But the short-term indicators can't help but pick that up. So we have the StochRSI, the Williams percent R, the Stochastics, and the rate of change going back 10 periods. And we're still oversold in the intermediate term with the rate of change 50. It hasn't moved all that much. The PMO is also, it's another oscillator that's trying to turn up after being really extreme. And the Copic curve, which is also positive, but coming off of being extreme, but still extreme, even with the improvements that we're seeing. And we're still far away from the 50 period moving average as measured by the boom indicator. And then overbought, we have some PMO studies that are showing some strength coming inside of the S&P. And long term, we're still looking rather negative with the 150 period simple moving average. No change to the overall scenario yet as it applies to the Fed. Just kind of this little spat that was going on there seems to be at least under control for the time being, but could always flare up again at any time. The dollar was up, so we're gaining a little bit back there, but still it's under 100. And interest rates ended up being unchanged. We're at 4.39% with the 10-year yield. We're actually ticked up. We're out of the 25 range now. And instead of being extreme negative like we've been for weeks and weeks, we're just negative now. We're at 27 where we had been at 24. And we're starting to show a weakening trend. Again, with the two big up days that we've seen, we're still negative. The red line's above the green line, so that hasn't changed, but the ADX is starting to drop a little bit and moving below its moving average. With the up day, our bias is positive, and now, for the time being anyway, our momentum, which is the last 2, 3, 4, 5 days kind of taken together, we're still mixed. We're still not turning over and looking positive, but we are leaning a little that way because of the last two up days that we've had. The economic reports that came out, we had the weekly MBA mortgage applications index really fell, minus 12.7%, where last week it was down 8.5%. And the global manufacturing, again, the takeaway from this, I usually don't show the charts for this one, is are we above 50? Well, we came in at 50.7, and that's up a little bit from 50.2. So a little bit of an expansion there. The services also above 50 at 51.4, but we're down from 54.4 that we saw last time. So it's still showing expansion, but much less expansion. New home sales actually stronger than expected at 724,000. They expected 684,000, and that's up from the 674,000 we saw last time there. So here's the weekly applications for mortgages where we're seeing a drop off here. And a lot of this is probably having to do with interest rates going back up. And so folks are like, I don't want to get a mortgage. I don't want to refinance right now. We were getting under 4% there for a while with the 10-year yield. Now we're up around 4.5. We're dropping back a little bit, but maybe folks want to delay that for the time being. Then new home sales, they are going up here, but we're still pretty much range bound. We're not really breaking out or really trending currently. And then the price, the 3-month average is actually coming down a little bit here. We're seeing this as more negative. Then looking at the net bullish sentiment, both retail and institutions together, still getting a very low reading here. And now this could be positive because a lot of times when we get a very low reading, we use this like a contrarian indicator. And so we'll see if we can come through with some improvement here. And then April 9th and 22nd could signal the worst is over. Who knows? We'll just have to see how this goes on. It says when we're over 89% with the NYSE advancers and over 89% with advancing volume twice in 9 days. I mean, somebody sits in a room and thinks this stuff up. Here is what it looks like. We look out a month, we're up 75% of the time. And then further out, 3 months, 6 months, 12 months, we're up 100% of the time with some pretty decent returns. So it's just showing that we really came up and then we fell back. Then we really came up again within 9 days. This is a little bit like a Zwag NYSE breadth thrust type of a thing, even though we're not getting a signal there. This is kind of the same type of thing that you see this initial thrust up, a little bit of a settle back time, but things tend to remain positive. Now, our charts are not really switching over to positive yet, but we'll have to see how this one plays out. We get this every month. It's the truck tonnage index, where for quite a while, going back pretty much to the COVID crash, we're seeing more of a disconnect here, where the S&P's been going up, the purple line, as it's been coming down, but we've been kind of floating along sideways here with the truck tonnage index, which is another way of looking at the economy. And then gold, the 10-day rolling returns getting really extreme. Not really surprised that we're seeing a pullback in gold right now. And then Bitcoin ETFs, they're seeing a lot of inflows. And Bitcoin over the last couple of days has seen a nice little bounce too. But we're seeing some money actually starting to go back into that area. And then this is just looking at, it's the IMF, the International Monetary Fund. And then what do they expect the global economy to be? Well, they still are seeing it positive, and they saw it positive in 2024. They're still seeing it positive in 2025 and 2026. In the advanced economies, that would be the US, Europe, things like that. It's coming down, but they're still seeing positive growth. And then with emerging markets and developing markets, they're seeing more growth potential in those areas. Then large inflation pickup coming. Well, again, the things going back and forth about are these tariffs going to be inflationary? Are they not? Well, Goldman Sachs thinks yes, they will be inflationary, and that's going to last for a while before it comes down. And then to kind of compare that, they say, well, if there were no tariffs, then we wouldn't see any inflation per se. At least inflation would be coming down to that 2% target that the Fed is trying to reach. And just speculation on this point, just a forecast here. Then part of the reason we're seeing a little bit of a bounce in the dollar is it's just been getting hammered. We fell under this green line, which is 100 here. At least this is a different gauge. I look at the US dollar index, but it really came down a lot, and we're getting to an oversold condition here. And so we're seeing some bounce from that. And then right after the election, there was all these announcements coming out that all these companies were going to have capital expenditures or capex. Well, that's really dropped off now. It's like, well, with all these tariffs and everything, maybe we're not going to spend all this money after all. All right, here is the chart where we set the high not too long after the open. We had a nice little gap up. We got up to R3, could not get through that level, and then spent the rest of the day coming back down. So if you were to just look at this chart by itself, it's not that positive of a day. We set the high at the open and then ended up closing down below the open here. Now, from one day to the next, from Tuesday to Wednesday, yeah, that's a nice little move. But just looking at the price pattern within the day, it shows more selling than buying. And we're down just a little bit in the initial overnight session as I record this. But this just shows how we immediately took off right after the close. We were looking strong in the overnight session going into Wednesday. And then we just carried that over into the futures, into the cash market. We topped out here and then ended up closing well off of the highs. Not seeing any real distinct move here. We were positive, but again, this is coming down when we look at large cap growth versus value. But the red line and the blue line are pretty much hand in hand currently. And we are seeing a little bit of an improvement here, but again, we came down at the near the close. We try to look at this in a bigger picture where we had been seeing more of an improvement. Now we were seeing it going down. Now we'll see if this is going to be able to continue with some move to the upside. And then our end of day charts growth had a good day. It was up 2.37%, where value was up 0.9%. It was also up more with the mid caps and the small caps. So some improvement there. So little bit of changes that are improving here with the small cap growth to value ratio, the mid cap growth to value ratio, but we're still under the 50-day moving average. A little bit of a tick up here with the S&P growth to value ratio, but we're still below both the moving averages and still in a downtrend now. And a little bit of a tick up here with the growth versus value ETFs, but no real improvement. And then looking at discretionary, which is now in a downtrend, we had a death cross here. Staples are holding up a bit better, even though they get hit from time to time. But when we look at the ratio, we're just about ready to see a death cross, even though we bounced up a little bit in Wednesday's session. Then these are some of the newer charts that I'm showing here. This is just the regular discretionary versus staples, which means it's weighted on this ratio basis. And that's similar to what I just showed, where we're coming down here, but we are seeing a bounce right now. Then we look at the equal weight, which is also seeing a little bit of a bounce, but still declining overall. The ratio between tech growth and utilities, which is more value, a little bit of a tick turn up here, but it's still declining, meaning the market's still defensive. A little bit more of an improvement here when we compare biotech to healthcare, getting a nice little bounce there, but really not changing the trend. We're just getting to the high end of this downward sloping trend line, if there was one on here. And then hotels versus utilities, a little bit of a bounce here, but overall it still continues to decline, which is more defensive. And semiconductors, see how we're just kind of bouncing around here. We're not really breaking out to the upside. We're just kind of chopping along sideways, where now we're more at the high end of this recent range. Did see a nice little bounce from the home builders, but we closed well off of the high. That's not encouraging. Transports also were up, but closed pretty much at the low for the day. Retail also closed near the low, and regional banking closed near the low. So these charts show some improvement, but the fact that we couldn't hold on to those gains is not really encouraging. So we are now starting to turn down here. We're below the moving average with the ADX. So the trend, it's still a trend because we're above 20, but it's a weakening trend. And we're negative because the red line is above the green line. And we're seeing a weakening trend in the short term. Also continues to be negative with the red line above the green line. Continue to be dropping off when we look at our volume oscillator because we're still below average with volume. And so that's why the previous chart continues to decline. We're coming down with the Ulcer Index, but it's still giving us a rather high reading. And we're below 30. Sorry, I should have changed this. We are below 30 with the VIX here. So that's a typo right there. But we're still above 20. And that's the part that's showing that volatility is still pretty strong. And then looking out across the VIX futures contracts, seeing a little bit of a bump here when we get up into July. But really, the takeaway is that we're 28.45 here. But even looking out, we see volatility decreasing, but all of these readings right now are still above 20. And so that tends to be more negative overall. And when the VIX is coming down, the VIX of the VIX also drops, just showing how volatility is dropping off slightly here. We're continuing to go a little bit below the moving averages here. And the momentum for the VIX continues to be down, but it's still giving us a very high reading. And we declined with this fear gauge and we declined with the other fear gauge. So a little bit of confirmation there. Saw a bit of a bounce here when we look at the high beta versus low beta ratio. When this goes up, that means folks are favoring the high beta stocks, but the overall trend has clearly been down with this. So for the time being, it's just a little bit of a bounce. And we did go up with the equity put call ratio daily chart, and we're just chopping around here with the 5-day chart. We go up, we go down, not a lot of conviction there, and we're still declining for the most part with the 10-day chart. We're still getting a very low reading though with volatility risk premium, well below the band, and it continues to fall. And we're still positive with the advanced decline line based on price. We're coming up to the moving average, but we haven't crossed above it yet here based on volume. We are seeing an improvement with the advancers decliners. So we're above zero and going up. If we go above this red line, that's when we start to look extreme. But you can see the chart pattern in here. We were here, then we came down, then we came back up, then we went down. Now we're back up. It's really a trading range. It's big and it's a lot of volatility within that range. It's kind of a tornado versus a hurricane, where a hurricane's much bigger, but a tornado is smaller but has a lot more energy in it as well. And so it's like we're just seeing the volatility crazy, but we're not really going anywhere with price. And we are improving with the new highs, new lows chart, but again, it's not because we're seeing new highs, it's because we're seeing fewer new lows. And we're crossing, but now we are looking better in the short term, though. The short-term advanced decline ratio is above zero, and we're still above zero with the red line, even though you can't really see it. It's coming in above zero as well. We actually turned negative, though, with our smart money indicators. We're dropping back below the red line with accumulation distribution. So that's some of the weakness that started to come in as the day unfolded. We saw more selling than buying, and that caused us to close well off of the highs. We're still going down with the chicken money flow. That's negative, and we're declining below the midpoint with the chicken oscillator. So all three of our smart money indicators are negative. Improving a little bit here, but we're still negative with the vortex because the red line's above the green line. And we're just getting a little bit above the moving average here with the S&P Advanced Decline Line Study based on price. But with the other indexes, the NYSE Common Stock, mid caps, and small caps, we're still below declining moving averages here. And we're seeing a bit of an improvement, but we're still below 50 with those stocks in the S&P above their 20-period moving average. And a bit of a tick up with the 50-period moving average study, the 100-period moving average study, and the 200-period moving average study. But nothing really all that solid. Short term, we're in a downtrend now because the 50-period moving average is below the 200, and we're just seeing all this action taking place down below both of these moving averages. We did pick up with volume, but we're still below average. And saw a bit of an improvement with the 20, 50, and 200 period moving averages on the S&P. We are extreme positive. This is showing good short-term momentum with the StochRSI. The Williams percent are just barely starting to come into an extreme positive reading. And we're coming up, but we're not extreme with the CCI 14, and we're not even pretty much at the midpoint here, just a little bit above it with the CCI 20. The short-term stochastics, a little bit extreme, but this is really touchy. And so to have two big up days like we've seen, and just to see this one moving up, not any more than it has, and we're just coming across the midpoint in the intermediate term, we're still going down with the long-term stochastic. And we are a little more positive here with the force index. We're back above zero there. And we're seeing an attempt at an improvement of the short-term trend based on 20 periods. We're just kind of jockeying around here. We're above both lines, so we're starting to see them turn up. If this can break out of this range here and keep going up, that would really help these lines go up as well. And we did get above the 20 period simple and exponential moving averages, but we closed down below them. So this isn't really acting as resistance because we opened above it. But the fact that we closed off of the open and well off of the high and below the 20 period moving averages, that's not all that encouraging. Now, the rate of change going back 10 periods, yeah, because we're going back here pretty much to the low now. You count 10 bars and we're extreme there. And we're just a little bit below the midpoint with our standard deviations chart. So we're not positive there. We got above the midpoint where we're getting up into the +1 channel, but by the time we closed, we were down into the -1 channel. And still showing inflation at 1.4% according to Truflation there. Intermediate term, still declining. We have two solid up days and the balance of power continues to fall. Is that a negative divergence or is that giving us an early warning sign here? And we did come up to the 10 period, excuse me, the 30 period exponential moving average. That's now acting as overhead resistance. We couldn't get above that, and we closed well off the low down around the 20 period exponential moving average. The go no go has gone from deep purple to lighter purple here, so a little softer rock going on that way. And we're just a little bit below the midpoint with our highest high, lowest low value chart. We are improving with the TTM squeeze. We're no longer extreme negative, and we're the lighter shade of red, so that's somewhat of an improvement there. But we're still extreme with the rate of change going back 50 periods. We cannot seem to break above this pink line, and we've been down here pretty much for most of the month of April. We're really coming down with standard deviation. It's starting to pick up this choppy range that we've been in. And so we're seeing the speed of movement of the S&P really slowing down. If this drops down below the moving average, then that's when I stop showing the chart in the videos. An improvement, but still negative with our 14 period ease of movement. We're still flatlining, but negative with the Arun indicator. We are showing a bit of an improvement with the S&P McClellan oscillator. We're above zero and going up. So we're starting to turn up with the summation index based on price and volume. So that's showing some improvement, but you can see how choppy these things have been lately. No real conviction. And we're showing an improvement here with the NYSE McClellan oscillator above zero and advancing. So we're starting to turn up with the summation index for the NYSE based on price and volume. So there is some improvement there. We're turning up and going above the midpoint with the Swindler trading oscillator based on price. We're turning up but haven't quite crossed above the midpoint with the Swindler trading oscillator based on volume. And this is what I'm saying about we're positive with the PMO because we're above the moving average, but we're still getting a very extreme negative reading. We are starting to cross above the moving average based on price and volume. So there is some improvement. And we're getting extreme now with the PMOs that are rising. The buy signals are improving, and we're showing a little bit of an improvement with the PMOs above zero. So inside the S&P, we are seeing some improvement, but it's not really robust right now. We've gone from neutral to positive with the Elder's Impulse system for the S&P, but we're still just kind of coming back to where we were not so long ago. But we're positive with the parabolic SAR. The dots continue to be underneath, And we're getting an extreme negative reading with the slope oscillator, but we're positive because we're going up above the moving average. And we're also pretty extreme here with the MACD after being really, really extreme, but it's above its moving average. So it's extreme negative, but positive because of the trend. So we are seeing some improvement with our momentum. We're turning up with the slope after being extreme. The TSI is positive. We're starting to turn positive in the intermediate term here, but we're still negative with the long-term tricks. We're trying to come above the moving average now with the KST. So we're cautiously showing some improvement here. The Copic curve is now positive. It's going up after being extreme negative and crossing above the red line. We're above 50 with the money flow, but we're still below 50 with the ultimate oscillator. No longer extreme negative with the Sean trend meter, improving slightly there. We're still below a declining moving average with on balance volume. We're coming a little closer to 50 with the intermediate term RSI, and we're just barely starting to cross above 50 with the short term RSI. And really no improvement to the intermediate term trend. We're above the blue line and the red line, but we need to stay above these to actually see the lines start to turn. So they are still declining. And we're still below all the plotted moving averages. We tried to give a go at the 20 period simple and exponential, but then we closed down below it. And we're not that far away from the 20 period moving average now, but we're still far away underneath the 50 period moving average as measured by the boom indicator. Now, this is where we saw some improvement though. The bullish percent index of the S&P really spiked up and is crossing above 50. So there is some buying going on. Is that growth being bought or is it value being bought? We're not really seeing anything definitive right now. It's likely growth that's, or excuse me, value that's actually being purchased right now. And we did improve with the NYSE bullish percent index, and we're actually crossing above 50 with the NASDAQ 100 bullish percent index as well. Wondering if we're going to see another signal here with the mass index. It won't be a signal until we come down to the red dashed line. And we came right up to this 20 period simple moving average of the open, high, low, close. That was the high that we set. And this is an indicator that I developed years ago for a basic trading system. And I mention this ever so often. I don't do that system anymore, but I kept the indicator. And this has actually been kind of helpful that when we're below this and we bounce back up, these areas will quite often act as overhead resistance. Well, that's what happened here. And the rainbow itself is still continuing to go down. We're still above the 50% retracement level and the 38.2 retracement level. So this longer term support, I could have dropped this chart out because we're kind of getting a little far away from it, but I also want to provide a bigger picture look at the same time. And we're coming right back up to this trend line on the weekly chart, going back to the 1987 crash. This is a bigger picture of that same trend line. We're right back up to this level now. And seeing a little bit of an improvement here with the Heiken Ashi. It's turning positive. We're turning positive with the Kegi chart. When it goes from red to black, that's positive and it's pointing up. But we're still negative with the Renko chart, though. And we're positive with the three-line break. So not a lot of confirmation there. We did see some new X's drawn in with the point and figure chart. It picked up the early gap higher that we had, but then we closed well off of that. So you can see this whole conglomeration here. I mean, this looks like four football teams all lined up with offense and defense together. We're not seeing any, real movement here. This is just picking up the range that we've been in. Long term, we're still a little bit below this green line with the 150 period simple moving average, where we're slightly above it with the 200. And we switch back to positive in the long term with stocks, but everything else, the S&P, mid caps, small caps, NASDAQ 100, negative on all time frames here. And we're positive with commodities and stocks in the long term. Everything else is negative currently. And we had energy and staples, which is that's encouraging. These are more defensive areas, and they were actually down, where we saw tech, discretionary, and communication leading the way higher. So that's good. But is it going to last more than one day? We need to see more follow through with this. And an awful lot of green here. We did have gold that ended up because it's been really overextended to the upside, so it's pulling back. but there was some improvement. But we saw some improvement from defensive areas like healthcare had a BPI cross above 30, utilities crossed above 50 with their BPI, tech above 50, industrials above 30, the financials, we like that. That's above 50. The Dow got above 5,300, then 5,400. Now we're seeing, can we give 5,500 a try? And the Dow got back above 40,000. And then the NASDAQ, 16.4, 16.5, 6, 7, 8. We got up to 17,000 by the time we closed. Seeing some improvements here. This is later in the day. Healthcare had a BPI cross above 50, but communication had a cross above 30 with discretionary above 50. So there's some improvement. Tech above 70. Materials and industrials are improving there. So there was some improvement internally, especially when you're looking at bullish percent indexes. There's some buying going on, but we need to see it follow through to our growth versus value ratios. And the Dow still in a downtrend. It's coming kind of close to this S1 level and wasn't able to get above that. And is also closed well off of the high and even below the open. We're neutral with the diamonds with the Elder's Impulse system. And we also closed well off the high and well below the open with the NASDAQ, which is now in a downtrend and continues to be there. But we're positive with the Elder's Impulse system for the NASDAQ. Downtrend with the NASDAQ 100, also the same story, closing near the low, well off the high, well off, and even lower than the open. But we're positive with the Qs when looking at the Elder's Impulse system. The momentum for the NASDAQ 100, though, is positive, as measured by the PPO. And small caps, they were up over 1.25%, but they've got so much damage that they need to repair. But they're in a downtrend. The other small cap index, the Russell 2000, is also in a downtrend, seeing a little bit of short-term positive momentum when we're trying to cross above 50 with the RSI, but a lot of damage. And this has been one of the weaker areas in 2025. We're still positive, though, with the Elder's Impulse system for the small caps. Mid caps ended up closing down below this S1 level and still open. We set a high, closed well near the low and much lower, quite a bit lower than the open. But we're positive with the Elder's Impulse system for the mid caps. The Wilshire still dancing around below both moving averages, so that's in a downtrend. Also below both moving averages here with the total US stock ETF. Financial sector, this was good. We're getting back above the 200-day moving average. If this can hold up and get above their 50-day moving average, that would help keep this trend positive. The FANG index, we're getting really close to a death cross here. We've spent so much time under both of these moving averages. This blue line is really coming down. And then Apple was up 2.43%, but it's in a downtrend and kind of range bound lately. Amazon up 4.28%, but now we're seeing a death cross being generated. Microsoft in a downtrend, up over 2%. Google in a downtrend, up over 2.5%. Meta was up 4%, but it's still hanging out below both the moving averages. Nvidia in a downtrend, up 3.86%. Tesla, I guess there's word that Elon Musk is going to limit his time in Doge and maybe go back and start running the company. So even though Tesla had a pretty bad earnings report, it was up over 5% because they like the idea of Musk coming back and actually running things. But Tesla is also still in a downtrend. Netflix setting an all-time high here. So that's probably one of the strongest looking charts right now of all the magnificent 7, 8, illustrious 11, whatever you want to call them. This chart's looking pretty good compared to the other ones, and it's in a more solid uptrend. Got to watch those movies. We saw a little bit of a bounce up. We're keeping an eye on this SPY to Staples ratio. We are still seeing more of a breakdown similar to what we saw at the end of 2021 before we went into the cyclical bear market of 2022. We bounced up here, but overall, we're seeing a lot of deterioration in the bigger picture. It was coming back a little bit above the 200-week moving average. This is the very long term. This is the secular trend. And so even though we've been under pressure, the 200-week moving average is still going up. So the secular trend for semiconductors is still positive. And we're wondering, are we going to be able to make a stand here and bounce up off of that? Or are we going to fall down below it? That's what we're waiting to see. And we look at retail, which is really underperforming the S&P, which is the S&P has been doing pretty bad too. This is the retail sector all by itself. It's in a downtrend, trying to come back up to its 50-day moving average. And seeing a little bit of a disconnect here when we look at US versus world stocks, the short-term correlation is starting to work off here, where we've been going up here with the S&P, but we're going up a little bit more internationally. So world stocks on a shorter term basis are outperforming. Longer term, we're starting to level off with the correlation between the two. Oil was down and getting a little bit further into the lower 60s now. And we did bounce up, but we're still below 100 with the US dollar index, and we're in a downtrend. And we were unchanged. Bonds really went all over the place. They opened quite a bit lower and then closed near the high. Okay, that's kind of the opposite of what we saw with stocks. They opened at the high and closed near the low. So there was a real shift going on that's not necessarily positive, even though it was an up day. And we were unchanged pretty much up a little bit here with the ETF based on price of the 10-year. And not really much of an improvement, a little bit with the Qs to S&P trying to get above its moving average, as is discretionary to S&P, still right at the declining moving average with large cap growth versus value. So the large caps are underneath the moving average, seeing a little bit of an improvement with the mid caps and the small caps. So what's our outlook? We're still negative, short, intermediate, and long term. That has not changed. And let's see, I thought I updated this, but let's go look at the next chart. And a lot of it has to do with Doge and the cuts happening there. But the big news are the tariffs. All right, so we're going to get initial jobless claims and durable goods, as well as existing home sales on Thursday. And then we'll get consumer sentiment on Friday. So this is showing, this is from investing.com. If you like to go look at an economic calendar there. This is also showing what the previous readings were. Seasonality, we're neutral to positive across the board for April 24th, but the week after options expiration in April tends to be up 64% of the time. So we've got some positive seasonality there. And we do see some positive seasonality going into the 24th before we, well, yeah, it's a little bit, this the green dashed line, this is the post-election year. So we do see positive seasonality going into the end of April. We'll see. But everything seems to fly out the window when tariff news is hitting the markets. So we're still negative though with our three smart money indicators. We're below the moving average with accumulation distribution, and we're going down with the Chaikin money flow and the oscillator. We're negative with our long-term growth to value ratio. The swing and trading oscillator is negative. I could have put this over on the positive side. We are improving with our oscillators, but we haven't really switched over into, we're still getting some extreme negative readings, but it is improving right now. And our bullish percent indexes, those are kind of the stronger looking areas of the market right now across the three indexes that we follow. The moving average studies, they're improving a little bit, but all of them are still below 50. Ease of movement is negative, the ultimate oscillator negative, the vortex is negative, and our long-term special K oscillator is still negative there. Positive, we're just barely hanging on to an uptrend with the long-term discretionary to staples ratio. Another day or two, and we don't see that thing screaming up. We're going to have a death cross there, and then this will get thrown over to the negative side of things. And the McClellan oscillators, both for the S&P and NYSE, that's showing some improvement as well. The parabolic SAR is positive, as is the money flow, the financial sector. If you can recapture that 50-day moving average, that would be even better. And the momentum for the NASDAQ 100 continues to be positive. And we're just watching to see about this mass index, if that's going to produce some kind of a reversal signal there. So we are still negative in the short, intermediate, and long term, but we are seeing some improvements, especially in the short term. We're seeing some slight improvements with the intermediate term, with the stronger areas probably being the bullish percent indexes. But we're still negative in the long term because we've seen a recent death cross there. Thank you. I hope you found this helpful. Have a really, really good day, and I will talk to you in the next video.